Hi again, this is Rick with AmazingAccuracy.com. Today is December 7th, 2016. It's currently 9:35 p.m. Chicago time. You're currently looking at a weekly chart of the coffee futures market. What I wanted to do here is just show you a really quick forecast for coffee. Now, if you're familiar with my videos, you're familiar with these red diamonds. They represent the FDates that we pre-calculate to forecast upcoming cycle tops and bottoms. Now this is a weekly chart. That means every one of these price bars represents one complete trading week. And so this current week is represented by this price bar that you see highlighted here with my mouse. Now today is December 7th, which is a Wednesday, so the week is not done yet. It's completed come Friday, December 9th. So this price bar represents week ending December 9th, and it's not a completed week yet, so this is not a completed price bar. The rest of these, of course, are. Now, if you'll notice this previous red diamond here, this is week ending November 11th, and it marks the very top that led to this 5-week bearish run down in the coffee market. And the weekly F date nailed it right on time. Another thing I did here is I applied time price squaring 90 degrees, as you can see a little 90 here. And so the current move is now 3 times 90, 270 degree move down. I find it of interest only because the low is considered pretty much at that level. You can see that it would act as a support, but again, this week is not complete, so it could go lower. But right now, as it stands, it looks like support. The other thing too is this red zone here. That's an oversold zone. You can see the green's the overbought zone here. So as prices moved into the oversold, the probability for prices to then propel out of that zone is high, because it's oversold. So things tend to reverse when they become extremely oversold, which is the case right now. Now, there is a plus or minus 1 price bar margin of error on these forecasts with these F dates, such as this red diamond shown here. However, in this case now you can remove the minus part of that deviation equation, because we've already passed last week. Last week did not make any kind of a turn. So the window now is narrow. So we're expecting this week to be a weekly swing bottom. Okay. And with this diamond here, after it made the top from this one here, and now we've arrived at this one, this alerts us, hey, we need to be ready, because this market now has a high probability of making a weekly swing bottom, and for weekly prices to now start making a nice little rally back up again. So a bounce up. Now the extent of that bounce up, you know, at a minimum I would expect it to be, you know, 1 to 2 weeks, 3 weeks at the most. But overall, we could be looking at going into mid-January, around week ending January 13, because that is another weekly cycle turn period, is around the January week ending January 13th, week ending January 20th, around that time period. But anyway, instead of focusing on that, I just wanted to draw your attention that we have now arrived at the time when to expect a weekly cycle bottom. And so I would start to expect to see coffee prices start to rebound off of the bottom of this week. Anyway, thanks for watching, and if you haven't done so already, please subscribe so that you will be informed of timely videos on my next forecast, and I'll see you in the next video.